Imagine holding the power to move markets, shift economies, and influence the lives of millions, not as a president or a prime minister, but as the chair of a central bank. This is the story of Jerome Powell, the man at the center of America's financial system, guiding it through crises, controversies, and historic decisions. Jerome Hayden Powell was born on February 4, 1953, in Washington, D.C. He grew up in a middle-class family, the son of Jerome Powell Sr. and Patricia Hayden. His upbringing in the nation's capital meant he was surrounded by politics, law, and policy from an early age. He attended the Jesuit Georgetown Preparatory School, where academic discipline shaped his foundation. Later, he studied political science at Princeton University, graduating in 1975. Powell wasn't just a quiet student. He was known for his curiosity about how systems worked, whether political or financial. After Princeton, he pursued law at Georgetown University Law Center and earned his Juris Doctor in 1979. Law gave him a professional path, but soon his career would move into finance and policy. Powell began his career as a lawyer at Davis Polk & Wardwell, a prestigious New York law firm. But in the early 1980s, his interest shifted toward investment banking. He joined Dillon, Read & Company, where he spent several years learning the mechanics of financial markets. This move shaped his career, from law into finance, a dual expertise that would later set him apart from other policymakers. In the early 1990s, Powell entered public service. Under President George H.W. Bush, he was appointed as Undersecretary of the Treasury for Domestic Finance. In this role, he dealt with crucial issues like government debt management and the regulation of financial institutions. He gained a reputation as a calm, pragmatic thinker who could balance financial expertise with political realities. After leaving the Treasury, Powell spent much of the 2000s in private equity at the Carlyle Group, one of the world's largest investment firms. Here, he managed billions of dollars, deepening his understanding of how money, markets, and businesses interact. Yet, despite his success in finance, Powell was never entirely removed from public service. He served on nonprofit boards and contributed to policy discussions in Washington. When the financial crisis of 2008 rocked the global economy, Powell became more vocal about the need for strong regulation and responsible economic policies. His ability to bridge the worlds of finance and government made him a valuable figure. In 2012, President Barack Obama nominated him to the Board of Governors of the Federal Reserve, marking his return to public service, this time at the heart of America's central banking system. As a Fed governor, Powell was seen as a centrist, someone not bound strictly by ideology, but by practical thinking. He believed in regulation but also in the importance of free markets. He supported measures to stabilize the financial system but remained cautious about excessive government control. His balanced approach gained respect from both Republicans and Democrats, a rare quality in Washington. In 2017, President Donald Trump nominated Powell as chair of the Federal Reserve, succeeding Janet Yellen. It was a historic moment. Powell became the first Fed chair in 4 decades who was not a trained economist. Instead, he was a lawyer and financier. Critics wondered if he could handle the weight of leading the world's most powerful central bank. Supporters argued his broad background gave him a practical edge. As Fed chair, Powell faced immediate challenges. He had to balance rising interest rates, trade tensions, and market volatility. Trump frequently criticized him publicly for raising rates, something unusual for a sitting president. Yet Powell maintained the independence of the Federal Reserve, reminding the world that the Fed's job was not politics, but economic stability. Then came the COVID-19 pandemic. In early 2020, financial markets collapsed, unemployment soared, and the U.S. faced its worst economic crisis since the Great Depression. Powell and the Federal Reserve acted quickly, slashing interest rates, launching massive lending programs, and injecting trillions of dollars into the economy. His actions were credited with preventing a complete financial meltdown. While debates continue about inflation and long-term effects, Powell's swift response made history. In 2021, President Joe Biden renominated Powell for another term as Fed chair, signaling bipartisan trust in his leadership. Under his guidance, the Fed shifted focus from emergency measures to controlling inflation, a challenge that has dominated headlines in recent years. His calm, steady communication has been key in guiding markets through uncertain times. Beyond policy, Powell is known for his personal style. He is not a flashy figure, but rather measured, modest, and careful with words. Colleagues describe him as approachable and pragmatic. Unlike many central bankers, he avoids complex jargon, preferring plain language so that ordinary people can understand what the Fed is doing. Today, Jerome Powell stands as one of the most influential figures in global finance. His decisions affect not only Wall Street traders but also everyday workers, business owners, and families across the world. From his early days as a lawyer to becoming the leader of the Federal Reserve, Powell's journey reflects resilience, balance, and a deep sense of responsibility. The story of Jerome Powell is not about fame or politics. It is about service, leadership, and the quiet power of someone who holds the steering wheel of the global economy. In a world filled with uncertainty, Powell's life reminds us that true leadership often comes from patience, steadiness, and the ability to make decisions when the stakes are highest.